How's it going, everyone? It's Sam. A lot of people want you to sell right now. They want you to sell your crypto. They want you to sell your stocks. But really, you have a golden ticket. And I want to explain why that is and talk to you about how this will 10x. And there's really no doubt in my mind that it's going to happen. Also, if you don't mind, hit subscribe, turn that bell notification underneath the video. This is literally my third time trying to film this. I had a much better location last time. I was on the golf cart in front of some water, but apparently those videos don't want to upload. They don't want to have sound. So if you like sound, hit like underneath the video, hit the subscribe button. Let me double check to make sure that's actually recording, because one of the times it didn't record. This is a rough day, but I'm still here, still producing content for you guys. So let's get into it. Some people think that you should sell out of your positions. Some people think you should sell out of your positions, and instead of having stocks and crypto, you should put your money in a money market fund or treasuries or a savings account and get 5%. QE Infinity says you could risk losing 20 to 30% in stocks, or you can make 5% risk-free in treasuries. A lot of investors are starting to ask themselves why they would invest in stocks at this point. Now, after this person said this, Alex Becker, who's a very wealthy individual already, said this times 10. He is very much on the same page, saying that we could see a massive dip. And of course, he's responded to a lot of things since then. He says, your chance of another 10% in stocks is low as F. Your chance at eating a 15 to 20% dip is somewhat likely. Why not make a guaranteed 5%? Now, I understand what he's saying. There are some individuals that would like a 5% return. If you have $100 million, 5% return pays for everything you need in life 10 times over. Now, if you're someone that's still gaining wealth, 5% return is probably not going to cut it. But even if you're still gaining wealth, if you knew that there's going to be 15 or 20% dip, a 5% return sounds pretty good. You could buy back in at the bottoms. However, I'll tell you, this is not very likely. Let me show you something. Black Monday was one of the worst days that we had ever had in the stock market. Actually, the worst. The Dow Jones fell 22.6% in a single day. Other indices had a similar return that day, had similar drops. Now, what happened? Was this something that stuck around for a long time? Were we able to get out of this? Well, the Fed immediately started to essentially quantitative ease. They injected a lot of money, billions of dollars, back into the financial system through long-term treasury buybacks. They slashed interest rates by 50 basis points, and this would be known as quantitative easing today. The Fed is very likely, if we get another recession, to do the same thing. Right? We have our rate is at basically the terminal rate. We're at 5.25%, I believe, which means they can easily lower rates if they need to, if we hit recession. If we don't hit recession, well, then you're still going to want to be invested in stocks, because they're going to still lower rates over time, most likely, assuming inflation doesn't get out of control. Keep in mind, we're down 60% from the CPI high. So either scenario, it seems like the stock market would do well long term. And that's what we've seen in the past. If you look back at history, the stock market does not fall for very long. This is the S&P 500. We see historically that we rebound quite quickly. In 1987, the high was $336, and then the low was $223. So we fell 33%. 2 years later, we're at all-time highs again in 1989. Now, if you move to 2000, it took a little bit longer. If you move to 2008, though, you could have sold at the bottom, sold at 750. Let's say you even sold at 800. You would have missed on a 5.5x over 15 years. The thing is, when markets fall down, it's very hard to want to buy back in. That's the problem with selling. That's one of the problems with selling. You can sell because you think the markets are going to go lower, but typically, by the time that you actually do sell, when the most noise is saying, the most people are saying to sell, that's typically the time that you want to be buying. That's when the sell signal is the loudest. That's when everyone's talking about selling, because the market looks the worst, the news is the worst it could be, right? Like FTX selling, or the sell-off from FTX, that was when we were at 15,500. Since then, the market turned around. You want to be buying when it sounds bad. Now, some people are saying, well, it doesn't sound that bad right now. We're near all-time highs on the S&P 500, right? We're within 10%, 5%, and yet we could face a massive recession, right? That's possible. There's 7 companies that are carrying the S&P 500 right now, and all of them could be affected if we go into another recession. Apple's not going to sell as many iPhones. Alphabet's not going to be able to sell advertising as well. Meta, not going to be able to sell advertising. Microsoft isn't going to be able to sell to as many companies their stack, their Office suite. NVIDIA's not going to sell as many chips because companies aren't going to have the money to dive into AI. Amazon's not going to be selling as much, whether it's cloud space or advertising or retail products. People won't be able to afford Teslas if the Fed keeps on raising rates. That's what people think. Keep in mind, the rest of the S&P 500 still is down significantly. If you think that it can't rally more, you're sadly mistaken. A lot of these companies are still in a tough spot because of interest rates being this high. And when the Fed starts injecting more money into the system, when they start lowering rates, these companies' profits are going to expand. A lot of other companies are going to do better as well. I mean, their dividend stocks down 30 to 70%. Their high-flying companies, high-risk companies are down much more than that. So if you think that the S&P 500 can't hit all-time highs, you're sadly mistaken. Bitcoin's still down 60% from the high. So keep that in mind. We had one of the worst performing markets ever. Last year, the start of the year, was the worst that we had seen since 1970. NASDAQ was down about 30%. It's natural for the market to rebound after years like that. That's what we typically see. So while we could see a recession, we could also just see what we normally see, which is that there are always fears of recession. There's always fear of the market falling down. And really, all you have to do is just continue to buy. If you buy, let's say you started with $10,000 here today, if you bought just the S&P 500 or some investment that gives you a 9% return on investment, you put in $6,000 a year for the next 40 years, you would have $2.4 million. So, do you want to buy treasuries that yield 5%? You're going to try to time the market. You're probably not going to do it correctly. If you miss out on just a few years of returns, that can make a huge difference over the long term. Now, if you just got 5% rate of return, if you just bought treasuries for the rest of your life, you get $808,000. Obviously, you don't want to do that. So a lot of people think they can time it perfectly, maybe even get more Bitcoin or more S&P 500. But if you've been in this game long enough, you know that it's impossible to time exactly what's going to happen. Everything's counterintuitive. When you want to buy, you should probably be selling. When you want to sell, you should probably be buying. Now, I say that there's a golden ticket because there's a 99% chance S&P 500 is gonna, I'd say 99% chance, 99.5 maybe, that the S&P 500 is gonna 10x. Now, how long does that take? I don't know. Could be 5 years, could be 50 years. We don't know. Most likely, it's gonna 10x in about 30 years. That's typically what we see. And the thing about this golden ticket is, when you invest in the stock market, or even in Bitcoin, I'll say that it's riskier, but you're basically given a golden ticket. You're told it will 10x. You just don't know when you can cash it in. You're given a 10x, you just have to wait. And at some point, you'll know that it's worth 10x. But until then, it can be up and down in price. But if I were to give you a golden ticket and said, hey, pay me $10 for this golden ticket, and then you pay me $10, then I say, okay, this will be worth $100. I'm not going to tell you when, but it will be worth $100. I think you would probably take it, right? You would probably buy that golden ticket. Now, of course, there's counterparty risk with that, but if it was true, if it was universally true, 99.9% chance that it was going to happen, you probably wouldn't sell that golden ticket. You'd probably just hold on to it. Now, of course, you could always try to trade it in, but if you historically knew that it'd take about 30 years, there are going to be ups and downs, you probably wouldn't sell it, right? And that's where I think most people's heads need to be for the stock market. They need to realize that they will get a good return. It's just a question of waiting everyone out, waiting out all the weekends, just continuously buying over time, and you will retire pretty wealthy. Now, of course, I believe that's the case for Bitcoin too. It's a little bit different, more volatility, but if you just hold on to Bitcoin for the long term, you'll be just fine. Now, thank you so much for watching. I appreciate it. Let me know if you agree with me. Also, I will say, I do have money in a savings account. I'm not immune to wanting to save some money. I have some big plans for stuff that I'll need capital for, but that doesn't mean that I'm selling crypto or selling stocks to build up that savings, right? I continuously dollar cost average and add more to my positions over time. I just think that's the best way to go. Now, thank you so much for watching. I appreciate it. Let me know your thoughts, and I'll see you in the next one.